Now we're going to bring on Stephen Bernard, going to talk about Myanmar and its currency plans. So, what's the story here? What's the latest?
Big changes as they're trying to become more economically integrated with the rest of the world, which they've been cut off from for a very long time. They decided that on Sunday they're going to change the exchange rate and how they manage their currency, the Jat, spelled K-Y-A-T, and it's going to be a big change because right now officially they peg their currency at 6 Jat for every $1. The black market going rate is around 800 for $1. And the plan is to probably move it closer to the black market rate, which will become the market rate, and they'll manage it within a certain range and allow it to become more freely floating, which huge change, especially for a country that's just kind of coming out and back into the world's economy.
It's just phenomenal. I mean, to have that discrepancy between the official rate and the black market rate, what kind of transactions were happening at the official rate? Was any business getting done at that rate?
I would say no. I don't know for certain, but it seems like most everything that's been happening for years there has been happening, the black market rate being literally street deals, exchanging currency on the street, and because they were such a closed off place, the amount of transactions probably weren't as great as most other places, and it's going to be a big change, and there is some risks to that in making such a big change so dramatically and so quickly. The announcement only came yesterday, and they're doing it Sunday.
Yeah, I mean, I think I recalled reading the journal's coverage today, and you were involved in that the IMF had wanted them to move a little more slowly on this.
Right.
It's not an easy change to make, as you just alluded to. To move so quickly could cause all sorts of unintended consequences. Now, you wrote about also just the fact that they're going to have problems that are different. They face a different situation than some of the other countries like Taiwan, South Korea, that had moved from a managed rate to a free-floating rate, right?
Right. You can try to draw comparisons to a Taiwan or South Korea in that they were initially pegged to the dollar. Then they went to this kind of range-bound trading where they allowed it to trade in kind of a band. And Taiwan and South Korea now actually don't even have bands anymore, but they still intervene frequently, their central banks, to kind of manage it a little bit. What Myanmar is doing is going from the peg to the band part, so that's like kind of that first step. Yeah. The issue being is that they don't really necessarily have the infrastructure. Their economy has been so closed off.
The financial infrastructure.
The financial infrastructure to actually necessarily handle this, that's going to make it more challenging than, say, a Taiwan or a South Korea, because that infrastructure for exchanging currencies, the banking infrastructure isn't quite there, as, say, where a Taiwan or a South Korea or some of the other Asian countries that have taken this path, they were a little bit more integrated into the world markets and a little bit more forward in that area.
So, big picture, a year from now, what do you expect to see? What do you expect to see in this development?
Well, I mean, I think if they are successful in this first step and they can get it into a range successfully, and there's those risks. That's the big risk, is the initial phase. Are they actually going to be able to control it? Their reserves, it doesn't sound like their actual foreign exchange reserves are big enough that they could necessarily rein something in.
Yeah, speculative attack would really be difficult for them to deal with.
Exactly. And maybe they put in rules, and that's something you'll have to wait and find out here in the near term, is will they be able to put in the rules that can avoid that speculative attack, and maybe they benefit from not having the infrastructure, so maybe that makes it harder for speculative attacks.
No, that's true.
So there's a little bit of balance there that could maybe actually help them.
I mean, there's threats whenever something like this happens, right? There's threats related to inflation going up. Right. I mean, if the currency weakens a great deal, there's on the other side there's threats to export competitiveness if there's a lot of volatility in the exchange rate. So, a lot of unknowns here.
Especially for a country that's trying to get back into the world market and become a player in its region now after being closed off for so long. There's a lot of unknowns.
Yeah.
Exactly.